Today we're going to do a follow-up video on GameStop. We wrote a fairly in-depth article yesterday on our blog, which you can see at SpotGamma.com. And if you click on the blog link, you can see this article called the GME Gamma Trap. This discusses the in-depth mechanics behind what we think is happening, in that market makers are able to start selling the stock due to an increase of put options. If you go to our Equity Hub, which is a subscriber product, and you can get a free trial of this for 5 days, 5 days to get the analysis on over 3,500 different stocks and ETFs. You can see a whole bunch of data that we aggregated about the options complex, about how options are positioned. And what we really want to focus in on here today is this key gamma strike. And what's so important about this key gamma strike is it tells us where the center of dealer hedging can be. It's an important support and resistance level. And when this strike changes higher or lower, it's telling us where the center of hedging is changing, right? It's giving us an idea of where major support and resistance for the stock is shifting. And so today it is going to open at 230. And this is based on last night's data from the close. And what's so interesting is that the day before it was at 320. And so if we just pop over to a quick chart of GameStop, you can see here that this is the 230 level, right? This is where the stock kind of pinned yesterday afternoon and then again into the close, really. This morning it's looking like it's going to open down around 185. And if we go up to 320, you can see how important that level was in the stock as well. So there's this zone from 320 and then another strike down here as indicated around 230 that were major levels. And the concern for bulls here is that if this key gamma strike shifts down to something lower like 150 or 100, that the center of gravity, so to speak, is pushing lower. And the mechanics again behind this selling, we think, is a lot of it is related to put buying, and we have some data to support that. If you look at the total put open interest, which is the put total column here, you can see that at 1.8 million contracts, it really outweighs only 300,000 total call open interest. In a similar way, volume, as shown here for yesterday, was skewed towards puts. And if you scroll down and look at the 5-day history, you can see that that is really nothing new. Put volume has been higher in this stock all through the major surge in price. You can see the divergence here. And again, as we just mentioned, the open interest total is really skewed towards puts. And so what happens is we have some interesting positions of deep in the money calls. And again, reference the blog post for more about this, wherein dealers can sell some of their long stock as the stock moves lower, and that would be the hedging related to these deep in the money calls. And then every time more put buyers come in, that allows dealers to unwind some more of that long stock hedge. And so there's a lot of pressure now on the stock, and because call options have been so expensive, it's been harder for people to buy call options. It's been more expensive for people to buy call options and kind of get that leverage that a call offers you to start shifting the stock and the momentum higher. So this is what we would call a reflexive cycle or a gamma trap, because as the stock goes lower and more put buyers come in, dealers can start selling, which allows them to further unwind hedges related to these deep in the money calls. So this is a feedback loop of sorts that makes it a little bit difficult for bulls, because they lose that call buying tailwind, right? So the mechanism now is feeding the stock lower. What we want to see for the bullish case is this key gamma strike to start shifting higher. We want to see the strikes tied to gamma to move higher to 250 or 275. You can see kind of this reflected here, that when the stock jumps up and the key gamma strike goes with it, that can help to support higher prices. And so we will be watching for that. We hope this video is helpful. If you go to, again, SpotGamma.com, you can get a free trial of the Equity Hub. And we have a bunch more analysis on our YouTube channel and at SpotGamma on Twitter. Thanks.